Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, May the 25th. It is going into Memorial Weekend. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to look at the market macro to micro, take a look at the market, the structure of the market. Then we drill down to our trade levels, our targets, and our hypotheses. This video is going to lead up to those hypotheses. I do this live for my members and for guests, and it's important to make sure that the context is there for the hypos, and therefore this video is usually about 20 to 25 minutes long. If you're looking to see the hypos only, just watch the video, move to about 15 minutes in, you'll see my hypos. We do create multiple hypotheses. Nobody can tell you what the market's going to do. Therefore, we have two main hypos. Wait for the market to open up, and then we determine who's in control, execute the plan that best suits the market. And then we have two alternative hypotheses for when we go into a trend type scenario. Excuse me. So quickly, let's take a look at the news. We just did have core durable goods came out better than expected, although the market is not really reacting to them. There is a zipper measured move right now that's valid until we're above 3450, and the primary target on that is 1450. And that's where the micro composite for the last 10 days was until it shifted tomorrow. Lots to talk about, but let me digress here. So durable goods was better than expected. The month-over-month orders were not, and excluding defense was not. But other than that, pretty even keel on the news. We do have Powell speaking from the Fed in 31 minutes. We've got 10 o'clock. We've got Michigan consumer expectations and consumer sentiment. And then 10:30, we've got the ECRI. And then at 11:45, we've got Evans speaking and Bostic speaking, both from the Fed and Kaplan. I mean, the amount of Fed speakers this week, and also the ECB as well, has been pretty crazy. And then 1 o'clock, we've got the rig count. Of course, it is a holiday weekend, but there is headline news whether or not this summit with North Korea. Yesterday, the auction was interrupted. So let's take a look at yesterday. Oh, actually, first, I'm sorry. Please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. This is a subscription room. If you're interested in checking out the live trading, we do these live go-to sessions in the morning, and then we do live trading during the course of the trading day. Send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. Everything is done live here through the go-to. So taking a look at, let me just, I'm going to put my mic on for a second, off for a second. Sorry, I got a cough this morning and I can't get rid of it. So taking a look at yesterday. Yesterday, our main hypothesis was a rotation down, but we were looking for them to find buyers here at the value between the VPOC and the value area low, and then rotate us up through and go target. The target on hypo 1 was this 36. We did get the North Korea news. The scene of the crime was 30, and it rotated us down. We got a little bit deeper push down, almost to the 2705, which was the daily down ATR target. And then we basically just drifted back up, created a nice V, and came up into the upper distribution and fought the range high, but just could not get above it, and they end up closing. This volume up here shifted the composite VPOC, and I'll show you that in just a couple minutes. And then overnight, we got the continuation. So, it was hypo 1. It just dipped a little bit deeper, but failed to get the breakout until we got into the Globex. And you can see here in the Globex, we got the continuation, and that target was hit. Nice FUBAR, Mr. Sneaky. I actually traded this last night, and I took the short here again. FUBAR, big spike in volume, inside bar, Mr. Sneaky, the technical gap against the 9. And although this took a long time to break down, it finally did make the move late into the open of the European session. They rotated it back up and failed to get back above that 36. And I don't know what's caused this move down here, but this is a pretty strong impulsive wave down. So overnight inventory is mostly net positive, except for this strong impulse down. Now, the strong impulse down creates a zipper measured move. Okay, and these are high probability targets, so I am expecting this to go down lower. And here's the impulse wave, has to be at least 5.25 points into a zipper. Okay, for 3 Renko bar pattern. It could be more than 3, but you have to have at least a 3. In the downside, it's red, green, blue. On the upside, it's green, red, green. And then we get the breakdown out of it, and the target is the 61.8 extension out of the zipper from the body of the zipper, not from the tail. So this has got a good probability of going down and hitting the 1450. So I haven't put the low of the night, the Globex, in, because we're likely to dip lower. But we're going to have to do something to put our levels in. So for the time being, I am going to put the low in at the 19. So let's talk about where we are in the bigger picture. Each morning, I do the same routine. I use a simple candlestick chart, and I start with the monthly. And what I'm doing is I'm using a 9 EMA and a 20 SMA. This is the 9, this is the 20. And what I want to do is just remind myself where we are in that time period. Are we still in a trend? Are we challenging the trend? Are we violating the trend? And just to make sure I don't get my bias, because right now this upward trend that we're in, and the day that we had yesterday was a dragonfly doji. That is a positive sign. It looks like we're balancing to make another move higher. But does that mean that we can't come back down? The trend doesn't even get challenged until we get into the lower 2600s. It doesn't get violated until we get into the 2400s. So trend is very good slope, good separation. Price is holding the 9. The trend is up on the monthly. On the weekly, it looked like it was going to break down. It looked like we're getting a trend change, but they've taken it back. And so far, we're holding above the 9 and the 20, although we still have the 9 below the 20, and we are lacking slope and separation. So we're in this consolidation area and waiting for the next move. Whether it's higher or lower, we don't know yet. Going to the daily, you can see that there's yesterday's dragonfly doji. We come back and we're challenging the 9 EMA. So this is an important level in at the 18 to 14 level. And if we break below it, we could come down and challenge that the 2600s again and a move towards the 20 SMA. But for the most part, this trend is still intact, but it is being challenged on the daily basis. Going to the 4-hour, you can see we were in this consolidation. It looked like they were taking the trend back, and then we get this last 4-hour move down, and now we're below the 9 and the 20. We've got a zipper measured move down to the 1450. That's an 82% about probability. So we could be seeing a possible trend change on the intraday. And going to the 30-minute, you can see that the trend is accelerated. We've got good slope, good separation. Price is paralleling the 9 quite nicely. And it looks like we're getting a start of a intraday trend down. So taking a look at the structure. Now, the smaller micro composite VPOC that starts from the 10th, the microcomposite VPOC was down here in the 14 area, and yesterday with the volume it shifted up here into the 26 27 area. And but we do have this dragonfly doji, which is a positive bar, but you can see we've got a good Gaussian distribution, and right now we're coming back down, and we're trading right in the balance of the longer time frame microcomposite that starts from that February the 2nd, and this distribution zone right here, and that VPOC shifted up from the 69 area a couple days ago up into this 1850 area. So this is going to be an important level to watch. The auction got interrupted yesterday with the news, with this dip down. Now we are going into the weekend, and this is typically a positive weekend for the market. So usually we drift up on this Friday on low volume as the institutional traders take off for their long weekend. So, but I'm thinking we're probably going to get stuck in the wick here and auction this area off a little bit more and balance around this 19. So I'm still in a more bullish scenario than I am a bearish scenario, but I don't think the range is going to be very big. I think it's going to be quite small. Areas to watch today, obviously, the 19 is important for us to hold, but I'm really giving that a little bit more room down to the 1450 and possible chop between that 19 and that 14 area. Keep an eye on if we don't hold the 1075 for a trip down to test the low from yesterday at 0575, and then of course the key line in the sand is going to still remain here at the 2703 and a quarter, and the key line in the sand above is still above this 2741.75. We keep failing there. That is the value area high of the larger microcomposite value area. So let's look at the overnight. Again, I'm still thinking we're probably we just did put in another new low. So now our overnight low is down to 18 and a quarter. Basically sitting right on that microcomposite VPOC, and I'm still expecting that it should go a little bit lower. So my hypotheses, let's just take a look at the levels. First of all, we've got a couple things that we've got to look at. First of all, we've got weekly critical mass. So right now the week open is 2728.75. Our daily ATR is 2765 with 1 day left. And if we get below the 2701, then there's unlikelihood that we're going to have a positive week, and the buyers could step aside, they capitulate, and the sellers take control. So watch this weekly critical mass down. The critical mass to the upside, 28.75 plus the daily ATR. The weekly critical mass to the upside is 2756.75. Oh, wrong one. I don't think this is going to be challenged, but I'm going to put it on the chart anyway, because that's what we do. We recognize where our levels are. Okay, and our daily ATR to the downside is down here at the 2710. So off of the overnight high, of 37.75, less the daily. Now the daily ATRs are shrinking, and I've got to start shrinking my my hypotheses. And I noticed that I'm still thinking in terms of when we had this average true range of 50 plus points, and things are shrinking. So I've got to just tighten my hypotheses down. Currently off the low overnight of the 1850, but I don't think it's going to hold. I think we're going to get another push down. But 1850 plus the 27.65, our upside daily ATR is 46.25. Okay, so what is my hypothesis? My main hypothesis is balance today with a upward drift. So I'm looking for an open auction in range, in value. I'm looking for a push down here to test the 14 to 1250 area, and then I'm looking for buyers to step in, rotate us up, and come up here and chop around in this low volume area from yesterday's double distribution, and chopping here, and maybe a drift up, okay, with the possibility of a late day holiday probe up into the 36. And, so I'm looking for the overnight low to get taken out, and then a drift up towards this 36. Whether we get there or not, I don't know. Hypo 2 is going to be basically the opposite of that, open auction in range, a push up into the 27, failure to break out of the prior day or a false breakout, but somewhere between the 27 and the 33, sellers step in and we come down here, and we basically chop inside the 27 to the 14 area and just go sideways into the holiday. That is hypo 2. Hypo 3 is a open test drive, take out the overnight low, bounce off of this 14, get strong push up this morning into the 27 to 30, chop up here, push up into the overnight high, take out the 37, and finally break through this 41.75 and push up into the 45 area before falling back in and closing somewhere in between the 41.75 and the 36. That is hypo 3. Hypo 4 is an open auction in range, chop, but then failure, and a push down into the 10 area, chop in here, fail, and push down, breaking through the critical mass and coming down into this 26.96.75 as sellers, buyers capitulate and sellers take over. So those are my four main hypotheses. I really think it's going to be more. See, we're making a new push towards this zipper measured move. Pay attention to these zipper measured moves right now. They're not a trade setup, but they're high probability targets. Find your trades in the directions of these zipper measured moves. They are working really, really well right now. So we're going to just continue to push down. I'm not going to stay on to see where the overnight low is. Make your adjustments as you need. It doesn't look like we're going to get a VPOC shift from the overnight. So the VPOC from overnight's up here at 34. And, remember, it's Friday. It's a long weekend. Be cautious. Don't get in a bad position and be stubborn. Take your losses small and protect your emotional capital as well as your actual capital going into a long weekend. You don't want to ruin your holiday weekend. As always, trade well, trade safe, and we will catch you on the flip side.